Welcome to Tech Finance and Politics. In today's video, we're going to be talking about the famous short seller, Michael Burry, and his latest big bet on a specific group of fast-paced stocks. February is an exciting month for the investment community. We've had a Federal Open Market Committee meeting, an abundance of economic data has been released, and earnings season has kicked off into high gear. But what you might have missed is that February is also the Form 13F season. And one of the more eye-popping 13Fs filled last week comes from none other than Michael Burry himself. Burry is known for calling bubbles, and his latest 13F reveals what he's been buying. He just made a big bet on China, buying stakes in fast-growing e-commerce stocks like Alibaba and JD.com. Now, you may be wondering, what would entice an investor who has a successful track record of spotting bubbles to buy stakes in Chinese e-commerce stocks? Well, we've got some insights that may surprise you. Firstly, China began abandoning its strict zero COVID policy in early December, following a rash of protests in various parts of the country. This move puts the country back on track to support above-average growth, which both Alibaba and JD.com can sustain profit from. Secondly, the regulatory risk associated with owning Chinese stock appears to be in the rearview mirror. The $2.8 billion fine Alibaba was hit with in 2021 by Chinese regulators seems to be ancient history, and JD.com hasn't attracted any attention from Chinese lawmakers at all. Thirdly, Alibaba and JD.com are relatively inexpensive compared to the valuation multiples of US stock. China stocks nosedived during the end of October and early November last year, but they really have not recovered since pandemic time, when Jack Ma brought heat and tension to the tech companies when he thought he was untouchable in China and made a speech stating the Communist Party did not know how to run financial institutions and they should just be leaving it to companies like his Ant Group. He said this in a room where half of the audience were powerful members of China's Communist ruling party. Clearly, he spent a bit too much time in the West and forgot where he was. That brought heat to all tech companies, and the party decided to rein in any and all CEOs and their conglomerates to ensure they fall in line. But that's the backstory. But really, the fundamentals of these companies and their growth potential, together with the lower share prices, has been allowing opportunistic investors such as Charlie Munger, Buffett's right-hand man, and now Michael Burry to scoop up shares of Alibaba and JD.com at cheap valuations. But why is this such a big deal? Well, Burry's bet against subprime mortgages prior to the financial crisis taking place made him famous. Now he's betting big on a rebound from a specific group of China fast-paced stocks. This may indicate a promising trend in the Chinese e-commerce industry. We'll be keeping an eye on these and see how they play out in the future. We'll be keeping you up to date. So to ensure you're kept up to date, make sure you hit the subscribe button. Hope you enjoyed this quick update. Until next time.